Hello and welcome. Today I'm with Peter Warnoe, the founder of Nordic Eye Venture Capital. So 2020 feels like a fresh start, new decade.
Happy New Year.
Happy New Year. What's your thoughts for Nordic Eye in 2020?
I mean, our thoughts is Nordic Eye is a startup, as you know. It's still an early business, a young business. I mean, we started in April 17, so we're not even 3 years old. Our first fund is 50 million euros. It's fully invested now. We are looking into the exit areas, meaning that with all our investments, 17 right now in the portfolio, we slowly start moving into looking at how we could increase the value, of course, but also maybe sell our investments. It would not happen in 2020, but we will sort of start looking into it. The plan is the next 3 to 4 years. We need to basically sell everything. That's part of being a venture capital fund. But doing that, we have had tremendous success in our value increase. A normal venture fund in 10 years will do a return for the investors of 3x. We've done 2.55x
already
in less than 3 years. One exit already after 7 months. So our numbers and our investors are very happy with our results, and we continue, of course. The forecast for our businesses look very good in total. So, of course, fully invested, we need to raise another fund. So step 2 would be in 2020 to raise a new fund of at least $100 million or maybe 150. That would be the normal thing to do. We've learned a lot from the first fund. We've done some mistakes, you always do, but we've also done some great successes. We might even have a unicorn in our portfolio that might become a unicorn this year.
What's your definition of a unicorn?
$1 billion in value.
Right.
That is a unicorn.
That's really exciting.
That's really, really exciting, yes. We have a company called Beat in our portfolio.
Yeah.
We invested in May.
Is that the high-tech wearables company?
Yes. We invested in May 18. The company was, at that stage, had a revenue of $33 million. They just closed 2019 with $130 million in revenue, turning it into a software company now, subscription model.
That's interesting because it's the valuation is perception of the business. So where it goes from sort of hardware, high-tech products to shifting its perception, or not perception, but shifting it to a software company now increases its valuation. And you've been instrumental in that, haven't you? Helping them transition.
Yes.
Because they sort of woke up one morning with the concept and idea of tracking your wellness through...
especially for women, yes.
For women, yeah. So like water bottles and these wearables, jewelry. And that's one direction. But you've actually worked with them to transition to a software so that the valuation can increase significantly, and that's actually turning it into a unicorn and $1 billion opportunity.
Yes. I mean, basically when we entered, it was a hardware company selling smart jewelry. And they still do, but we are transitioning it into a software company where you subscribe, mainly women do, and receive data, the application to be used to measure all your heartbeat, your wellness in general. So from being a hardware company, it's becoming now more sort of a marketplace or a software
like a
company,
software subscription-based
company. And of course, we do that also to maintain the customers and increase the value of the business. And that's why we might see that Beat would hit the unicorn level this year, which is $1 billion, which would be fantastic.
That's amazing.
If we are, knock on wood, so lucky that this happens, it would be probably the first VC fund in at least in Denmark, but mainly in the Nordics, who have unicorns in their first fund. So that's one of our goals. But in basic, I have to spend the first 6 months traveling around, finding investors in America, in Far East, in Europe, in Zurich, in Denmark also.
Globally, basically.
Globally, yes. For our second fund, showing our results and hopefully showing them that we can do even better if we have more money under management. That's what we're doing. And hopefully also we would do maybe 1, maybe 2 exits, meaning selling a couple of our companies on a higher value, of course, than we entered. So we also have some cases which we do not have so much faith in, because that's part of being a venture capital. If you invest in 10 companies, you would have at least 1 or 2.
That's the typical ratio, isn't it? For every 10, you're likely to have 1 or 2
It's very different from what stage you go in, from who you are, what kind of risk you take. Some say 33% of your investments go bankrupt. We've closed 1 business in almost 3 years. We might close 1 more this year. It's part of the game.
But your whole approach, being hands-on, being engaged and involved with the business, and adding value over and above just handing cash over, helps sort of increase those chances of success.
Yes, of course. When we go into these investments, we also look very much at what it is we can offer, and that's part of our
it's profiling the
position.
prospect up front.
Yeah, if we can offer and help them a lot, it of course increases the chances of success. So we haven't invested in a lot of companies where we really do not have any influence or do not know anything about
It's fair to say you probably say no 10 times more than you say yes.
Yes. Oh, yeah. I mean, in general, if we look back the last 2.5 years, we've probably looked at around 1,200 cases.
Wow.
We've done 18, 19 investments, so that's 1.5%. Then we look at how do we get these, how do we see these investments. Some approach us directly on our website, some is through our network, and some we chase actively. And if we go further down into the statistics, it's very clear that a lot comes from our network. People knowing people, people calling me, other venture companies calling us, founders presenting us, connecting us.
How many times do you think a CEO loses out on the opportunity of getting funding because they just haven't done the right preparation?
Ooh, that is quite a lot.
Yeah.
I mean, I have, of course, done a lot of keynote speaking about how to present. And people are in general have different views on how to do it. But I think you need to be very clear. You need to be very fast. I mean, if you look at statistics again in venture capital companies, they, in average, whatever they get from their website, they spend between 3 and 4 minutes looking at the deck. 3 to 4 minutes. So that means it really needs to be sharp.
Yeah.
Not too much information. It really needs to
10 or 12 pages, something like that.
10, 12 pages, very clear, very simple. And the reason why you send it is because it should be the access to the meeting. So people usually put on too much information. They present 40, 50 pages. You can imagine.
Yeah, it doesn't get read.
No.
It has to be direct and to the point.
Yes, direct to the point. And when you show up, be on time.
Yeah. The basics. Look
the
smart.
Basics.
Presentable.
Shave.
Know your numbers.
I was about to say.
Clean pants.
Know your numbers.
Yeah.
Know your business. Know your answers. Why is your burn rate so high? What is your plan? I mean, if you do not have a plan,
If you can't answer the basics, it doesn't distill
if you
confidence.
don't have a plan, I don't have a plan.
Yeah.
Those are the things you see from time to time. And of course, you see the hockey stick a lot. So we follow the cases quite a lot. Because, I mean, most entrepreneurs...
When you say hockey stick,
when I mean
what was your definition of
my
that?
definition of a hockey stick is that right now our revenue level is £100,000 per month, but in 4 months it's 6 million per month.
Okay.
So you're thinking, okay, why is it that we can increase our revenue month by month in 4 months with 10 times? They need to have a very, very good explanation. So what we attempt to do is we say, sure, if that is your plan, let's see if you follow the plan. And I would say 8 out of 10 or 9 out of 10,
Don't.
they don't.
No.
it's all wishful thinking. That's why it's called a hockey stick.
Okay.
So when we do our calculations, sometimes we always sandbag a bit, because we do not all, seem to be very, very optimistic.
I know the definition for sandbagging.
Yeah.
I got that one. Okay.
I think somebody told you once.
Someone taught me that a long time ago.
Know your numbers, know your costs,
Yeah.
know your clients, know your market,
Know your business.
know your business, you could say,
And come with a plan.
and come with a plan.
Well, thank you, Peter. That was really insightful, and I've really enjoyed your company today.
Thank you.
It's been great. Thank you. So if there are any other CEOs or founders that would like to discuss or have a conversation with me, would love to hear from you. Please use the email address below, and thank you for watching.